Welcome to CNBC.com. I'm Frank Holland, anchor of Worldwide Exchange. CNBC is celebrating Black Business Month in August. And today we're joined by the managing partner of Fairview Capital, Dr. Kola Olofinboba. Again, managing partner of Fairview Capital. Doctor, thank you for joining us.
Thank you very much for having me.
I think the natural question here is, how does a medical doctor, because you are an MD, turn into an investor? What was that journey? Give us the shortened version, if you wouldn't mind.
Yes, well, it's, as you can imagine, it's a very long story. It took quite a while to make that decision, but the shortened version was I had completed a residency, I was practicing, I was a hospitalist, one of the first of that breed of physicians in the late 1990s. I enjoyed what I did at the time, but as I projected what would be happening over the next, what I thought would be 35 years of my career, I had other interests that I wanted to pursue. And after thinking of a number of ways I might do that, decided to go back to business school. So I went up to the MIT Sloan School of Management, got an MBA, worked in management consulting at McKinsey for a few years, started first in the healthcare practice, which was a natural step, but over time moved to more finance and doing private equity work as a management consultant. And from there was recruited to Fairview in 2007. I've been here now for 18 and a half years, best career move I ever made in my life. And so that's the very, very short version of that.
Yeah, it sounds like it is a very lengthy story. So I want to talk to you about the firm that you're with right now. You have $10 billion in assets under management in your private equity venture capital business. I would imagine a good part of that is dedicated to healthcare because of your background. But give us a sense. How do you break it down? What's the percentage of investments in different areas?
Sure, that's a great question. So we have about 10.8 billion in aggregate fund capitalization in the funds we've had since inception. And a big part of what we do is invest in the leading venture capital firms in the world. In that VC practice, about 20% of that practice is in healthcare writ large, big chunk of that in biotechnology, but we also invest in healthcare services, healthcare, IT, and medical devices, predominantly through funds, and then occasionally co-investing with those funds in some of their companies. Over the years, we've seen an evolution of what the investments have been like. To speak, maybe the biggest part of what we do is on the biotechnology side. And over the last decade and a half, we've seen a lot of companies started focused on rare and ultra rare diseases where you literally had no treatment for. And some of these companies have been extremely successful in being first in class treatments for for diseases that didn't have treatment hitherto. More recently, as more of those ultra rare diseases, when you combine them, have become less rare, and I think the pressures on reimbursement and whatnot have become tougher. And also, as you see the success of companies that have continued to focus on large metabolic diseases, specifically obesity with the GLP-1s, I think you're seeing firms that are pivoting towards that as well. And again, these are things we see in our portfolio. You have similar innovations, similar changes, similar technology in all of the other areas that I mentioned. Happy to go into depth on any one of these.
I actually want to switch gears, if you wouldn't mind. On your website, you talk a lot about the agentic area of venture capital right now. I had the privilege of speaking to Robert Smith from Vista Equity Partners just a few weeks ago, and he was very focused on agentic AI and the differences it can make in companies. When you say it's the agentic era of venture capital, what do you mean?
Yeah, so we've been looking at the whole AI space for over 10 years. So one of the things we like to do is have a prepared mind. And a little bit over 10 years ago, we wrote a first white paper on AI machine learning. About 5 or 6 years after that, we wrote another one on generative AI. And in the last year, we wrote one on agentic AI, which is where you have AI now taking processes and going through multiple steps, without necessarily having any human intervention, and able to now do tasks that hitherto you would have thought only human beings would do. And you can see this applying across, all industries, across sectors, changing, the way work is done, changing who does or what does work. In some cases, disrupting industries and work types, but in many other cases, helping to augment, what people do. Now, specific to VC investing, we see AI across everything that we invest in. So 10 years ago, when we were doing the first white papers, we saw one or two funds that talked of, AI and machine learning, and this was their specific focus. Now, everybody who is in the IT space, in both on the IT side, but also even in the healthcare side, 50 to 60, maybe even higher percentages of their companies are either native AI companies or are using AI in some way. And so as venture capitalists, you have to be smarter. You have to have access to differentiated, deal flow that leverages the power of AI. As investors, which is, I think, one of the things we talked about in our article as well, you also have to be somewhat more discerning as to who's just, putting a patina over the same thing that they've done before, and there's really no advantage, and will probably get chewed up in this evolution or revolution that we're going through, and who actually understands what's happening, is able to invest in the best companies, the best ideas, the best people that will drive this change and ultimately drive returns as an investor.
You also have a wealth management business. I want to talk to you about private investments for the retail investor, often accredited investors who we're talking about when we're talking about private investments. The average 401k is about $315,000. Do you think private investments belong in a 401k? And if so, does it depend on the person's age, their risk tolerance? I mean, what are the deciding factors?
We actually do not have a wealth management business. Most of our clients are institutional investors, pension funds, endowments, foundations. We have some ultra high net worth clients, and we have a few family offices that have come in, through relationships with registered investment advisors that we know. But historically, we haven't necessarily had a wealth management business. Now, but to your question, we have also been keen observers of what's happening, with the intent and interest to have higher net worth and maybe even middle class people invest some of their retirement assets in 401ks in the private equity space. Without having the rules written out yet, I think it's hard to opine on who should or how should it be done. On a high level, I think there could be a place, and there should be a place for those who are interested in investing in this asset class that is able to tap into private markets, markets that are inefficient, so that if you can get the right types of investments, there's an opportunity to outperform, what you might do in the more efficient, more accessible public markets where literally anybody can invest. And you can argue about how effective, it is to how do you really get an advantage? On the private markets, that's not true. You can't get advantages because if you have the right connections, the right networks, the right knowledge, the right team, you get access to opportunities that not everybody else, gets opportunities to. So you can make an argument that why would you bar less affluent people from this? That said, I think it's one of those areas where you have to know what you're doing. It's not very friendly to tourists. So the rules are going to be important. How do people get in? How do you protect them? But again, that's not for me to decide. That's not for us to decide. But we're watching eagerly to see what those rules will look like over time. And hopefully we'll find a way to serve clients in this space in a responsible way and getting them returns that are accretive to portfolios and helpful for their retirement goals.
I also want to talk to you about underrepresented firms. Your firm put out a paper recently saying there are now over 1,000 women and minority-owned firms in the venture capital PE space here in the U.S. for the very first time, crossing that 1,000 milestone. What does that say to you about the overall space? And also, I thought it was a very interesting stat you had in there that the average fund has actually declined when we're talking about the size of it from about 100 million down to 75 million, but that's largely due to the growth of funds because smaller funds generally have fewer assets under management.
Yes. So one of the other areas that we invested in emerging managers, broadly. So these are newer funds, smaller funds, funds that might not necessarily have the brand name of the more established funds, but oftentimes are stocked with very experienced and very talented investors. And we've seen over time that if you invest properly and well in this space, you can do just as well, and in some cases better than you do in the broader private market. Within that emerging manager space, a particular subset of women and minority-led funds, over time, we just saw that there was very little information, very little data on this group. And so about 10 years ago, we started to aggregate the data from what we were seeing internally and publishing this report on an annual basis, just to show that there was this market for those who are interested in going to mine it for talented individuals who could invest profitably for them. And over time, we've watched this segment, this sub-segment grow. So when we started, there were just a little bit over 100 funds. And now, 10 years later, the last year we published this in the end of 2024, there were over 1,000 funds. This was the first time that it crossed that threshold. In terms of the fund size, that has fluctuated. But one of the things we saw in this most recent report was the median fund size had dropped to $75 million. I think a year or two before that, it was at about $100 million. So that was a drop. But we've seen that fluctuate over time. And that's in some ways is because of the current market we have. It's a tough, fundraising environment. Newer managers are forced to reduce the size of capital that they're trying to raise. And I think this is just a reflection of that.
I think that we got to end on you giving people some guidance about chasing their dreams. So you were a medical doctor, or you still are a medical doctor. And a lot of people would see that as, career success. You continue to be a medical doctor. You decided to chase another dream. What would you say to anybody else that has a dream that maybe, I would imagine some people said to you, well, why would you not want to be a doctor? Why would you want to switch careers? What advice would you give to people similar to you that have success but have other goals and other dreams in mind?
Yeah. I get asked questions like that, ironically, hardly ever from other doctors. They seem to get it intuitively why I might want to do this. It's, pursue your dreams. It's one life that you have to live. Be willing to take some calculated risks, be willing to work hard, and put yourself in a position to be fortunate with mentors, with sponsors. I have been extremely, extremely fortunate, over the course of my career, both while I was in medicine and since I transitioned to doing other things, to always have, one or two mentors and particularly sponsors who not just help me get better, but also put me in positions where I could demonstrate whatever skills, abilities I had and, get some recognition for it. I look back and I sometimes pinch myself because as I did it, I just did what I was doing and, living my life. But looking back, it's been a fantastic journey. I feel extremely blessed. I'm living my best life, working with wonderful, people, learning every day. One of the beauties of this business is the breadth of learning, and no 2 days are alike. So I'm constantly learning, seeing the world evolve in technology. And I encourage anybody who's thinking like this, be willing to take a risk, take a bet on yourself. You'll be amazed at what you can achieve.
Dr. Kola Olofinboba, Managing Partner of Fairview Capital, great to talk to you. Thank you for your time and your insight. Thank all of you for watching this interview for Black Business Month. I'm Frank Holland, anchor of Worldwide Exchange. Thank you again for watching CNBC.com. Have a great day.